As we were becoming close to the end of our budgeting year, we began thinking about where could we save some money here or there, a couple dollars, a couple hundred, maybe hundreds of dollars. We were trying to split hairs. All of a sudden, it hit me like a ton of bricks. How much do we pay our financial advisor each and every year? Turns out, depending how much money you have with your financial advisor, it could amount to huge amounts of money every year, thousands of dollars in our case. It makes most of the other line items in your budget seem small in comparison. To be fair, though, you have to ask yourself, what do they bring to the table? Hi, my name's Kurt. Welcome to the channel. I've been married for 32 years, retired for 3.5. Prior to that, I spent 30 years working in business, mostly in the continuous improvement field. This gave me an urge to always optimize each and every situation, which I've tried to do with retirement as well. If this kind of content sounds interesting to you, please like, subscribe, and share this content with friends of yours. Before we get into whether or not I chose to fire my financial advisor, let's get into the pros and cons of having a financial advisor. First of all, the pros. It is the ultimate in automation. They offer a true set it and forget it model. We meet with them, discuss our risk profiles, and they manage the rest. Secondly, theoretically, they have a lot of expertise in this field that I don't have. Thirdly, they present a non-emotional barrier to making some silly decisions I might want to make when the market goes crazy. And finally, as the primary CFO for our family, they would make it a much easier transition for my wife should I get hit by a bus. Now, what are the cons of having a financial advisor managing what could be large sums of money? First of all, fees. They love themselves some fees. Most traditional financial advisors charge an assets under management model where they charge you typically 1% of all the assets they manage for you. In addition to that, whatever mutual funds they have you in tend to have their own management fees. When you add them together, in my case, it added up to almost 1.75% of total assets under management. They charge that amount every single year. So for the ease of math, let's do a simple calculation. Let's say you have $1 million with this financial advisor. A 1.7% fee structure would mean $17,500 each and every year that I'm paying to the financial advisor and the mutual fund managers that are managing those mutual funds. Like I said, it made most of our other budget categories seem small. Second in the list of cons is each and every time I wanted to implement a change, whether that was where the money was coming from or how the money was going to be invested, they represented an additional step in that process. Thirdly, by the nature of their business, they tend to provide unnecessary complexity to your management situation. Most financial advisors will spread your money across a myriad of different stock and bond mutual funds. In my case, it was 13 different stock mutual funds and 6 different bond funds. It can lead to mistrust issues as well. You're wondering, with all these funds, are they truly acting in my best interests? Finally, your typical financial advisor has limited retirement expertise. Their expertise tends to be focused around asset accumulation, not decumulation. Many times in the last 3 years, the ideas of how to balance tax and healthcare subsidies that I brought to the table. Things that I learned from my master's degree in the University of YouTube. After one weighs the pros and cons of perhaps employing an assets under management financial advisor, but perhaps before moving to a more do-it-yourself model, you have to evaluate, do I have the skills necessary to do this myself? The first skill is, do I have the intellectual capability to do this myself? This is not a tough barrier to overcome. It's not rocket surgery, and there's plenty of information online available. Secondly, do I have the desire to learn this? This is more rare than the first one. Thirdly, Do I have the bandwidth to manage my own finances? It can be time consuming, especially when you're learning along the way. And finally, do I have the ability to rationalize crazy markets and not make emotional decisions? So, after weighing the pros and cons of whether or not I should have a financial advisor and evaluating whether or not I possess the skills to manage it myself, I decided to do it myself. But before I could do that, I had to have a difficult conversation with my financial advisor. Like I said, I'd spent 30 years in the business world, 25 of those managing people. I didn't necessarily ever shy away from having tough conversations, but for some reason I was reluctant to have this one. My reluctance was silly. After all, it is my money, and we can do with our money whatever we want. Secondly, I think they saw the writing on the wall, and the information did not come as a surprise to them, and they handled the situation with tremendous grace and were helpful along the way. Now that I'd gone through what I thought was going to be a difficult Dear John process with my financial advisor, where do I go from here? Well, I analyzed the major brokerage houses, Charles Schwab, Fidelity, Vanguard, in addition to where I currently had money with E-Trade and brokerage account, Chase, where I had my traditional banking accounts, and two different firms where I had old 401k accounts, Voya and Empower. After careful consideration, I decided the one that was going to fit me best, A, because it provided a true one-stop shop where I could manage all of my accounts, and B, their online presence and apps were very easy to use, was Fidelity. In addition, they offered a set of true 0% index mutual funds for me to choose. For extra credit, they offered a local office in case of emergency and to ease my concerns about my wife should I get hit by that bus that seems to be chasing me. I had many accounts to move to Fidelity from 3 different sources. Correct that, 4 different sources. So I had to set up a variety of different accounts. I set up an after-tax brokerage account that came from E-Trade as well as my financial advisor's firm. I set up Roth IRA accounts in both mine and my wife's name that were currently being managed by my financial advisor. I set up an inherited IRA account that I had with my financial advisor. I set up a rollover IRA account to move my 401ks into, and I set up a traditional IRA to move from my financial advisor from a pension from a previous company. Finally, I set up a cash management account in the hopes of replacing my traditional brick and mortar bank. All of these accounts moved over smoothly except for 2. First of all, the largest 401k I had didn't believe in electronic transfers, so they mailed a 7-figure check through the U.S. Postal Service for me to then endorse and mail on to Fidelity. After many painful days of watching the mailman and seeing if it was in the mail, it did come, and I was able to take it to my local Fidelity office instead of sticking it in the mail a second time. The only other problem I have was with the brokerage account I had with my prior financial advisor. Because he had some of those funds in institutional share mutual funds that Fidelity didn't offer, I couldn't move them over without taking a large capital gains and thereby ruining my subsidies that I get for our health insurance. So, I will slowly move those out over the next several years so that I can continue to get the large healthcare subsidies I get. So all in all, with a couple of months history, it hasn't gone too bad, and so far I haven't lost all our money. To wrap up, I think you need to evaluate what are the pros and cons of having a financial advisor and how do they affect you personally? Secondly, do you have the capabilities to manage it yourself and the desire? It can save you thousands of dollars each and every year. And it isn't that difficult, quite frankly. That's all I have for today. I'd like you to have a great day, continue to level up your retirement, and we'll see you next time.